Australia has unveiled its latest budget, its first under its new Labor Party-led government, promising tough spending controls and focused on helping Australians with the cost of living crisis. Now, it includes a new $4.75 billion cost of living relief package. That's to cover costs of childcare, parental leave, affordable housing, as well as healthcare. The government also pledged to do more to tackle climate change and invest in the environment, pumping in $12 billion to upgrade electricity infrastructure, $1.1 billion to protect the environment, and up to around $126 million per year for disaster prevention and resilience initiatives. And it's also investing over $75 billion of investment in transport infrastructure. That's over the next 10 years. The country is also beefing up defence, lifting funding by 8% to more than 2% of its GDP through to mid-2026. Now, as for the country's economic forecasts, the government expects 3.25% GDP growth this fiscal year. Inflation is expected to peak at 7.75% this December quarter, but it's also forecasted to drop to 3.5% next year. Meantime, CPI this year is expected to come in at 5.75%. And what about employment? Those numbers, they're expected to come in at 3.75% as well this year. Now, while the deficit for the year to June of 2023 is now expected to be $23.3 billion, down from around $49 billion that was seen in the pre-election update in April, making up around 1.5% of the country's GDP. Now, for more on Australia's latest budget, let's bring in Marcel Thieliant. He is Senior Australia Economist at Capital Economics. He's joining us live right here in Singapore. Good evening, Marcel. Some are calling it a bank not spend budget. We've seen a revenue windfall, no big surprises, but lots of spending restraint as well. What do you make of what you're seeing, of what's been unveiled in the budget? And did Labor deliver on its election promises?
Well, from what I can tell, yes, they did deliver all the election promises. I think the budget is the right medicine in the current environment. Obviously, we have very high inflation. There's been a very big increase in government spending since the start of the pandemic. It's still at very high levels relative to GDP. So spending restraint is the right medicine. I guess the one open question that the budget still leaves is whether the government will increase taxes at some point because they are forecasting very big increases in a lot of social programs, and they're making no efforts to rein that spending in. And if they don't do this, they might eventually have to lift taxes to lower the budget deficit.
Yeah, it does look like those stage 3 tax cuts that are set for next year, they're still going to go ahead. There was some speculation that they might be lifted in this budget. That's not to be. But let's look at the bigger issues, the structural deficit that Australia is in. It's forecast to worsen in the years to come. It's going to be worse 10 years from today than it is now. Did the budget make any meaningful sort of moves in order to fix that long-term fiscal situation for Australia?
No, it didn't. It didn't make any moves on that. I mean, there's lots of spending drivers. You have higher spending on disability insurance. You have high interest costs, and the budget also assumed low productivity growth for the next few years, which is probably reasonable. But again, this is obviously the Treasurer has only been in office for about 6 months, so it's maybe a bit early to expect big changes to fiscal policy. But if the government is serious about restoring the health of the public finances, then it might have to lift taxes at some point, because the current strength in commodity prices that is now delivering this big tax windfall will not last.
Yeah, there are always winners and losers with budgets, but let's look at the situation for ordinary Australians. I mean, the energy shock, it's going to persist. It's going to continue, expected until way through 2024 at least, maybe beyond that as well. But we didn't see any real cash handouts for people. We did see, to a certain extent, cost of living measures being offered, but people want help now. So could more have been done perhaps to address the energy issue for Australians? I mean take us through some of who we saw as winners and losers in this budget.
Yes, I mean, obviously more could have been done to support ordinary Australians with the cost of living crisis. But the problem is inflation is very high, and that's not only due to energy prices. I mean, we're seeing a very high increase in lots of good categories. And the more money you throw at the economy, the more likely it is that inflation will stay higher for longer and that it might eventually become entrenched. So at this stage, I think it's prudent not to offer too much relief for households. They will obviously take a hit from the high cost of living. But if the labour market remains tight and if a renewed slowdown in inflation doesn't prompt too aggressive interest rate hikes by the Reserve Bank of Australia, then at least the labour market will hold up well. So this is in a way it would be a positive for Australian households, even if they don't get a lot of direct support from the government.
All right, Marcel, thank you very much for that. Marcel Thieliant there, Senior Australia Economist at Capital Economics.